Hi fellow traders, I'm making this video to share my USD CHF analysis with you. I have taken an entry at 92.51 and this is a sell entry. There are two patterns which are there on the 4-hour time frame of this USD CHF. One is double top and another one is called double repo. If you have watched my previous videos, you know that I trade Jordan Napoli patterns, and if we look at this moving average, this is 3 by 3 simple moving average, and price closed below 3 by 3, closed above 3 by 3, and again closed below 3 by 3. However, this candle was a very small candle, which is why I didn't take the position right after closing of the this candle, and then I waited for further price action. When price started going down and when made this similar uh, uh, big bearish candle just like this, I took my entry at 92051, and the price right now is at 92051, and you can take the entry. I have plotted my Fibonacci not from this point but from this point, because this spike was created at 5 p.m. New York time when there is a high spread in the market. So this was a fake movement, and the low according to the real movement is this, which is why I have drawn Fibonacci from this price to this price. Now let's talk about the target of this trade as per this double repo pattern of Jordan Napoli. So it will give you a target of 50% retracement of the whole move up, which is here 91289. If we talk about the target of double top, which is still under formation, it will give a different target. This will be the neckline of the double top, and from this point, if we'll calculate the target of double top, so this is 40 pips, 40.3 pips to be precise, to the upside. So our target to the downside will be the same, that should be 40.3. So let's go down. So 40.3 will come something around 38.2 Fibonacci retracement, which will be something between 91.60 and 91.56.4. So these are the two targets which we can consider for our sell position. If you are just trading the double top pattern and you are very conservative trader, you should rather look for the market to close below this double top, sorry, close below this neckline, which is this one. Otherwise, you can take entry, an early entry, just like I have taken, because I'm not just considering one pattern. If we just look at the technical factors, the double repo pattern was completed right here when this tiny candle was closed below this 3 by 3 moving average. So double repo pattern was already completed. Price action is supporting bearish movement, and it looks like it's gonna break the neckline anytime soon. There is almost 1 hour remaining in the closing of this 4-hour candle, and I believe that this will penetrate below this neckline by the closing of this candle. So I took an early entry. Since this is Friday, we should keep our target as small as possible, and we should exit the trades before the closing of the day if possible. Otherwise, we'll have to carry forward this trade to the next week. So now let's look at our risk from this point. So we have taken position at 0.92051, from which our pips on the risk is approximately 37.2 pips plus spreads plus 3 extra pips, because sometimes market goes to the upside and it makes a new high, not pretty higher but just 2 or 3 pips higher. So we should keep our SL 2 or 3 pips higher than the previous swing high. So and since this is a sell position, we should consider ask price for placing our SL and TP. So I added 3 pips in this high plus 3 extra pips to avoid getting stopped out. So this is the one way of managing your risk. So then our total pips on the risk will be something around 37.2 plus 3, that will be 43.2 pips. So this is the risk for the people who are going to place a stop loss. That is another way of managing this position, is to wait for closing of the 4-hour candle above this high. Unless 4-hour candle closes above this high, we can still hold on the position. There are chances that the market can go and make a spike and then come back. So if you can monitor the market, you should rather wait for the closing of candle than placing any stop loss. And now let's look at the target. So since we are risking 43.2 pips, we can exit the trades with a gain of 43.2 pips if we want to exit the trade as early as possible. So let's look at the 30%. We are getting 31.5 pips here. So of course we cannot exit the trade here. We cannot keep our reward less than the risk. At this point, our gain will be 48.3 pips. So our target should be something around 38.2, which is also a target of double top. So we will keep our targets a few pips above this 38.2 level, because we have to add the spreads in this price, because whatever price we see there on the chart is a bid price. So if we add the spreads, it will anyway come around 91.58, and I'm gonna place my target at 91.60, and this is already giving me 45 pips, which is 45.2 pips, which is 2 pips greater than my risk. So 91.600 will be my target. Since I'm monitoring the market, I'm not placing an SL, rather I'll look for closing of the candle for the risk management. So that's all about this trade. Since there is no news in the market from Switzerland or from the US until the release of retail sales, then we can completely rely on the technical factors. And if we look at the retail sales, core retail sales and retail sales are scheduled to be released on 8:30 a.m. New York time on Tuesday. So we have Monday and we have today, Friday. So we have 2 days to close this position, and if we close this position before the release of retail sales, we will not be impacted by any outcome of retail sales. So that's all about this trade. Thank you for watching.